Hello guys and welcome to Daily Market Movements. Welcome to another episode where today we're going to be talking and analysing the gold market. Just before I start today's video, I just want to apologise for not posting a video last night. That was due to the fact it was my girlfriend's birthday, so we went out to the restaurant and unfortunately I didn't have enough time. But going forward, videos will be posted daily as per usual. And also just a quick mention to those who are still looking to join my Signal group over on Telegram. Please make sure you head over to my website, dailymarketmovements.com. I've left the website link in the description of today's video. I charge a very small fee of only $29.99. But back to the gold markets here. Gold had an awful day on Monday to kick off at the start of a brand new trading week. We fell sharply from around 1960 all the way down to, I think the swing lows yesterday were down at around 1915. We have recovered ever so slightly and we're currently trading on that 0.61 fib level, which is around 1922 to 1924. And that's, where we currently find ourselves trading. And I think that this area will act as support. If we break below it, then I think it's, that basically opens up a trapdoor down towards the 50-day EMA, which is all the way down at 1904. Providing that the 50-day EMA holds, that tells me that gold is still bullish in the short term. But if we were to break below the 50-day EMA, that then opens a trapdoor up down towards 1874. And personally, I think that we will then eventually go and trade all the way down to around 1850. And that's where the 200-day EMA sits. I've been saying for a very long time now that long term I am bearish on gold. You will find several articles at this moment in time. If you go onto Google and type down gold forecast, etc., you'll find so many investors and traders claiming that gold could be going to 2,500, 3,000. I've heard it all before. These articles have been around for decades. And quite frankly, I do not see gold going any higher than the previous all-time high, which is 2,070. Sure, you can buy gold here for short-term trade, look for the 50-day EMA to offer some sort of support, trade it back up towards, perhaps 1960, maybe even 2,000, maybe even the previous all-time high. But I do not see a move up towards 2,500 or even 3,000. I think personally, this is setting up for a fantastic longer term shorting position. You only have to zoom out of the chart to understand why. We go onto the weekly chart here, for example, for the gold markets, and we just see where we were trading before. We saw a very similar move in the gold markets where we went up towards 1920. That was during the financial crisis, 2 or 3 years after the financial crisis. And then from that area that I should also note that this phase here, I'll just box this off. This phase here, you could have found several articles and several traders speaking about gold running up towards a brand new all-time high, 2,500, 3,000, etc. They were still saying that back then. But what actually happened? Well, gold turned around and we actually had a 44% decline all the way to the lows here, which was just above 1,000 here for the gold markets. And this is exactly what I see playing out here for gold once again. I do see us long term, I'm not talking this year, I'm talking within the next 2 to 3 years, are slowly making our way back down towards the 200-day EMA on the weekly chart, which is down at around 1,600. And if we break below that and cause that bearish crossover, we could see a move back down towards 1,400, 1,300, 1,200, you name it. So longer term, I am bearish here for gold, but I know that's, most of you watching this video at this moment in time are probably looking for a short-term answer. And I think that providing that we are still trading above the 50-day EMA, gold is still bullish in the short term. But if we break below that on that first daily close, I will be shorting gold down towards the 200-day EMA.